Hi there, welcome to GrainTV. It's Wednesday, October 13th. It was a selling day in the grains with corn down 5, wheat down 11, and beans only off 4 cents a bushel. This morning we had more export business out of China with another load of 235,000 metric tons booked by China for 15-16 delivery. However, that wasn't really enough to keep the momentum going. Yesterday we had a 26-cent advance in soybeans. Today we ended down 4. We started the morning trading up, hitting about 919, but the rest of the day was kind of on a downhill slide. We keep testing this 909.5 mark. You'll see it here on the next chart where we had resistance back in late August, and we seem to be bumping up against that as support now as we've broken through it. So even though we traded down, we still ended the day above this 909.5 mark. It'll be interesting to see if tomorrow we continue to hold that, or whether the market will take a break and move below that underlying support. Let's take a look at some of the other news that's going on right now. Traders are starting to focus a little more attention in Australia, where the wheat crop is starting to have some problems. We've seen prolonged dryness since mid-September. Precipitation in key wheat areas is off 80% over that time period, and looking ahead for the next 2 weeks, the forecast doesn't look any better, with dry conditions expected and temperatures that are 10 degrees Celsius above normal. You can thank El Nino for that. El Nino is known to have really hot, dry weather in Australia, and I think that's exactly what we're seeing this year. So the question is going to become how much of that crop is going to be damaged as we enter the fill stage in the next few weeks in Australia. Let's take a look and switch gears domestically and talk about corn basis. I know I've been getting a lot of questions from producers about where do we think corn basis is going to go. And to answer that question, I'm going to go back to what I call an analog year, which is a year that's very similar to what is shaping up to be this year. And that year is 2007. In 2007, we had stocks relative to use of about 15%. Today, we're about 11%, according to the latest USDA figures. A little tighter than 2007, but not that far off. The other thing that's in comparison to this year versus 2007, in mid-October, we were about 42% harvested. So both of these years have similar supply and demand scenarios, similar harvest pace occurring at this time of year. And what I've done is overlay the U.S. corn basis on this chart for 2007 in black and for 2015 in green. This year we're a little bit higher. I attribute that a lot to the lower cost of freight, and especially barge freight. We've seen barge costs come down quite substantially, so we're getting a little bit better basis. What's interesting about this year for 2015 is we've had very little weakness in basis. We've been trading somewhere around -30 for the better part of 3 weeks. We're seeing a little bit of a tick up on the U.S. average basis. If you look at 2007, we had a similar pattern where the first part of October was sort of flat, and then we started to accelerate going into mid-October and through the rest of November. So I would expect a similar movement here, where we may be getting close to that point where basis starts to tighten up. We're seeing a lot of farmers lock that grain up into storage. I don't think there's going to be a surge of supplies in the cash market, and so once we get past this initial 2/3 to 3/4 way through harvest, I would expect basis to really start to pick up pace and start to move higher. For those of you that may be interested in the futures market, in those two analog years, you can see we are on similar trajectories here, both trading in that 350 to 390 range. Corn in 2015 is a little bit higher than it was in 2007. We didn't see much of a movement in 2007 out of the harvest lows, gaining about 20 cents a bushel. So that could be supportive of futures here for 2015. But overall, continue to expect pretty flat prices in corn. There just isn't much to get that surge going of a sharp recovery in the corn market. Again, we've been talking about this with exports really being pretty disappointing. The supply numbers are really good. So I think there's going to be little in the next few months to really get this market excited about moving, substantially above that $4 mark. That's all we got on GrainTV. Join us tomorrow. We'll be talking about export inspections and the soybean crush that comes out from NOPA.